Hey, good afternoon, everyone. Okay, it is a little bit before 1 o'clock. The market is still trading here, but I wanted to go ahead and jump through and go through the markets real quick and really dive a little deeper into corn. So let me start there. This yesterday in our video, what we talked about was this is December here. What we talked about was, hey, strength today, we want to buy it. And then early this morning, I went ahead and said, nope, let's just go ahead and get calls bought. And I wanted to show you why. Here is March corn. Here's your daily chart of March corn over here on the left. Here's your 240-minute, and here's your 60-minute chart. What we're looking at here this morning is this setup where we have a move off of the low from, what is this, the 29th, right? So off a low from Tuesday. We have, or Wednesday, we have up, sideways for 2, up for 3, sideways for 4, and then up again. Here we go. And on the 4-hour chart, this is what it looked like. Up, sideways, up, down. And what you can count that as is a 1 2 1 2. So on the short-term chart, that's a very aggressive count and a very aggressive move coming. And then we're also moving through these shorter term clouds. So for those of you that are new, that's a little bit of a speculative take on it, but it's important and relevant because when we're managing risk and in the algorithm, you have to understand how it works and how it thinks. So here on December corn, what we've been looking at is the wedge, okay? And we know that this is range bound. And we're not really even trying to guess or predict whether this market is going to go up the top or out the bottom. Our job in our algorithms just trying to make sure we're with it. So we know it's going to do one or the other, and it might do both. So if you think of your farm in terms of delta, or in other words, if you own your cash, you have a delta of 1, which means you're going to capture 100% of the move, or you're going to lose 100%, okay? When you fall out the bottom of this channel, what we've done here is the algorithm says, hey, there's too much downside risk. We need to get rid of that delta or take it to 0. So what do? You jump in and hedge, knowing full well that it might actually not go ahead and accelerate lower, but that's okay. Now, as it moves back up through the congestion and up out the top of this, it's going to flip from 0 or fully hedged to 50%, or it's now saying, hey, I'm willing to accept 50% of this risk back down to this low. Now, as we come up out of the top, it's going to get a little bit more aggressive and say, now we're ready to take all of the risk, thinking that these will hold, but we're not quite there yet. So the current position now is 50% long. So we have short futures on, which means that if we collapse from here, we're going to be okay because we've got short futures. If we rally from here, that position is going to become more, get longer. We're going to go from 0.5 to 6 to 7 to 8 to 9 to fully long as we roll up out of here, and then we just have full reownership on. So, and then we'll get the next adjustment, which is going to say now we have downside risk. We need to readjust that and get us back to a more hedged position. So we're just doing exactly what it's supposed to be doing. These long consolidation areas are just part of it. It's what markets do as they're undecided and looking for direction. But if we go back to our March corn contract and we see that this is starting to get more bullish, and even this little wick here doesn't bother me, because if this 596 level gives way, then it's going to pop pretty fast, pretty hard. And when your front month is acting that way, then you want to make sure that you get your back months opened up as well, because that they can turn bullish too. So we're just trying to make sure that that I'm communicating with you exactly what is happening with that algorithm, how it's working, and why it's doing what it's doing. It's not trying to be a hero. It's not trying to catch a low or a high or overtrade any of this stuff. It's just trying to be in this range and understanding that if we do break out the bottom side of it, we want to make sure that we capture it, and nothing short of that. All right, so now let's look at soybeans. Soybeans are disappointing action today. They failed to reclaim the hedge line here, and then all of a sudden the weather forecast flipped and down they go. But really not too terrible of action, because we're not violating this 13 low here, which is at 1323. So as long as that low holds, it's sideways to higher. And so I don't begrudge anybody taking long shots right down in here, because as it does work its way back up, it could get very, very explosive, especially if corn goes too. So today, nothing to do here except just be patient and wait for this to materialize. And obviously, anything below here is weak. Anything above it is bullish. And how does that look on the new crop? New crop looks the same. You know, we've been looking at this wedge for a long time here on new crop soybeans, and what we're doing is we're just testing the bottom side of it again. The more times it holds the bottom of this wedge, the more likely and probable a breakout to the upside is. Now today got a little tense, but it's got to break it and close it in order for us to be induced to take any action with it. So it could happen, it could be that way, but as it is, we're just going to be patient with it and let the market continue to digest and decide and discern a direction here. Now, wheat is also, this is your 240-minute chart of wheat. Go back to the daily. So wheat's had a good week, right? We broke lower, and now we've reversed and come back higher. It's great. We like seeing it, but what we want to see is a correction and then a reversal from that in order to confirm that we're going to go attack these highs up here and get a little bit more bullish fodder in there. So as far as wheat is concerned, 23, re-ownership is okay. I would recommend $7 calls, $6.50 calls, something in this territory right in here to open up that upside on bushels that were harvested this year, and that's just in a re-ownership situation. For new crop or 2024 wheat, we just want to be we just want to hold where we are. We want to make sure our upside's open, and I'm not recommending anything be done there. We will be taking the next signal though, whenever that is, and however it presents itself. But we can't know that until it gets there and materializes. So right here at 1 o'clock, how are we trading? Corn right into the midpoint of its range. Nice follow through to the to this setup, and it looks like a challenge of these higher levels is more likely than not guaranteed, but we'll just keep with it. Same with old crop corn, or March corn here is really trying to get a foothold and reclaim all this stuff. And then soybeans, I think we covered that as well. So always lots of volatility. I think it's here to stay. I think it's going to get bigger, not less, into the year and into the first of next. So really an important time to defend and protect next year's profitability. All right, that's what we've got for you today. If you have questions, please reach out and talk to us. Happy to help explain anything that's going on. And if you have any needs at all, please reach out to us. Let us know. We're here to help work through it. And as always, remember, there is risk trading futures and options. There are no guarantees, and you should only trade them in light of your own financial condition. I hope you guys have a great weekend. We'll talk to you later.